The following is a presentation of TFNN, live at TFNN, the Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the July 10th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with tools that empower human potential. Because living up to our potential is something we must master each and every day. So let's begin with an empowering belief or two. These this morning are going to be brought to us by Richard Branson. First one goes like this. What really matters is what you create. Does it work or not? Does it make you proud? Think about that. I like that. I like that philosophy. He also goes on to say, complexity is your enemy. Anyone can make something complicated. It's hard to make something simple. Well, you know, folks, I believe that as well, and I'm going to do everything I can to make these chart patterns that we take a look at, take something that's complicated and make it simple for you. That's really our outcome. And if there is something that's complicated that you're struggling with, just give us a call at 877-927-6648. I'll do everything I can to simplify it for you. He also goes on to say, in business as in life, all that matters is that you do something positive. Well, we want to be able to do something positive for you each and every day here at TFNN. Lastly, he says business is what concerns us. If you care about something enough to do something about it, you're in business. Well, I know you're in business. You're in the trading business, and you care enough about managing your money and trying to understand where these markets are going. So you can always give us a call again, 877-927-6648. Success, it leaves clues, and this is why I want you to understand patterns that are out in the marketplace in your charting system. I want you to understand candlesticks, Fibonacci relationships. It's why I want you to be able to read the message of the markets. So let's go read the message of the markets here right now. We've got the Dow is trading out at 15,320, up 21 points right there. You got the S&P totally flat, up 91 cents here. Composite up 7.5, leading the charge. The upside up 0.2%, up $7 at 35.11. Russell 2000, which has been strong here, just up slightly, up $1.40. We've got Pharmacyclics as the leader in the clubhouse to the upside, up $9.50. Intuitive Surgical having a little bit of a bounce after an $80 or so decline yesterday. It's up $8.70. You've got New Skin Enterprises. Maybe that move is real. NUS is the ticker symbol. They're up 10%. Whirlpool, that's up 258. That's up 2%. We'll take a look at WHR. Google's up $1.89. BlackRock up $1.80. Ralph Lauren up $1.79. To the downside, leading the charge, you've got Netflix off 484. Green Mountain Coffee Roasters down, getting roasted again this morning. They're off 5%, down 370. Apple's off $1.60. Panera Bread, a little bread here, a little loaf that apparently is getting burned in the oven, down 2.5% off $2. We'll take a look at that. Rackspace Hosting down 5%. X1 is off 3.5%. You've got, what's this here after them? BioReference Labs off $2. That's down 7%. Again, our call number 877-927-6648. Let's go take a look at these markets out here, see what we're doing. We'll start off with the S&P 500. Yesterday, the S&P 500 cash index getting just above the close of, let's see what the close here was. The close yesterday was 1652.32, and the high was 1652.45. So you had a rejection of the June 19th swing point yesterday. The top of that is 1652.45. Write that down on your pad of paper. Right now you're at 1652.70. You get a close above that. It sets up the normal move to the 0.786 level, which is at 1660. And at 1662, you'd have a nice little Gartley sell pattern, a 0.786 Gartley sell pattern. It looks like that really may be its target out there, but what it's struggling with is the downdraft session from June 19th, where everything kind of began out here. Well, it didn't begin. It really began on May 22nd with the key reversal day. I believe it was on June the 19th when Uncle Ben came out and, did his interview. That went ahead and rocked the market. Today we'll see if there's any rocking and rolling going on at about 2 o'clock, 2:15, when the minutes are released. And Uncle Ben, he'll be on the stump at 4 o'clock. He's waiting for the markets to close before he says what he's already said in the past. Yes, we're going to start tapering, sooner than later out there. So right now, where the market has gotten all the way back to, it struggled its way back all the way to where Uncle Ben last gave his comments in the marketplace. If we go take a look at the SPYs here, go see what the SPYs are doing. Trading out right now at 165.17. The SPYs did not make it all the way up to the top of June 19th, which was 165.89 out there. So that could be the target for the SPYs, between 165.89 to 166.97. That would complete a to B equals CD up. It was not a confirmed A to B equals CD up, I don't believe, because the B point on this was July 1st, 162.48, 131 million shares, and it got through it with 122 out there, 107 as the next follow-up, 119. So never has it had volume as it got past that B point, and it certainly doesn't have volume as it's going into the downdraft from June 19th out there. So what we really have is an A to B equals CD that is on light volume. So, yeah, we're down on volume, up on light volume. That's what's going on inside the marketplace. If we go take a look here at the, let's go take a look at the futures. I want to take a look at that for a moment. We'll take a look here. Here's the 5-minute futures contract out here if we're just looking to take a look at now. If you're watching us on Tiger TV, you'll see the upper portion of my screen's got this great tool out here that automatically measures contractions and expansions of swing points. So these patterns here, they work on all time frames, no matter what chart. And if we can see, if we take a look at the high that was being made here on the 5-minute chart at 10:05, inside the ES Mini was 1648.25. That was making a 100% move of a move, meaning going all the way back here to the time frame of 2,200 hours. So that is at 10 p.m. last night, just shortly after shortly before they released some numbers in China when the futures went ahead and traded down. So it made a 100% move of a swing point. Also made a 1.618 expansion of a set of swing points, and now we're seeing the normal move, which is just simply a pullback here. So that's on a 5-minute chart out here. That's just taking a look at measurements and expansions between swing points out there. So nothing more than just normal movement. That's on a 5-minute chart. I'm not suggesting that you trade, but if you do trade intraday, you certainly want to understand what's going on in time frames both above you and below you in the marketplace. Now, if we take a look at a little bit longer time frame out here, let's do that. How about a longer time frame being an hourly chart? So in an hourly chart, we'll go ahead and we'll pull this back here. In an hourly chart, we saw this nice bearish engulfing. I won't call it nice. I will just say it is what it is. It's a bearish engulfing candle. That took place. You had a little evening star reversal candle configuration that was between 2:30 yesterday afternoon and 4:30 yesterday evening. That sets up resistance. If we want to know where the bears are hanging out, it's at the 1649 level. Also, they are hanging out at 1648.25. That is the 10:30 p.m. session from last night. So we got bears out there, bearish engulfing candle. Same thing right here at the session of 4:30 this morning on a 60-minute chart. So a 60-minute chart has got more meaning than a 5-minute chart, but it helps you to understand where the lines of support and resistance are inside the market. So what we know here is we've got resistance up here, and we're going to call it 1649. You get above resistance, that says that it can go up to the next level. What's the next level? Well, that's when we're taking a look at the S&P cash. We gave you that. If we're taking a look at the futures marketplace on the ES Mini, the next level up would be the area of 1657. You're at 1645 right now. So, but what you've got to do on the 60-minute chart is you've got to get over resistance. If we go back, we take a look at a 30-minute chart out here. The 30-minute chart, we'll go ahead and pull this up here. Clearly, we had the bearish engulfing candle. That took place here at 3 p.m. Yesterday. That was my signal to go ahead and take a short-term short trade. I'm now out of that trade, completely flat out there. That was not just because of that bearish engulfing candles, because of other patterns that we're completing at that 3 o'clock time frame. But this also shows us where the bears are hanging out here and protecting their territory. So we know where today's battle is, and it's clearly at 1649 on the S&P. Let's go take a look at the other indexes in the marketplace. Let's go take a look at the Dow. Let's go see what the Dow is doing here. And the Dow, give me a moment to pull this up here. So the Dow here today, which it did not do yesterday, I don't think. Let's see. The June 19th, that's where the downdraft really began. That number, 15,322.07. Yesterday got up to 15,320.42. So 15, it missed it. However, it didn't miss it here this morning. It got up to 15,327.60. You're trading underneath it right now. The 0.786 retracement number, 15,330. So in essence, inside the S&P, we had a rejection of the June 19th candle. Now, today, inside the Dow, market's not over. We got a lot of time left here in trading. You have a rejection of that June 19th area. You're also at a 0.786 retracement, just a little bit higher above that level at 15,391 would be your 1-to-1 A to B equals CD, not confirmed by any type of volume move as the B point was crossed out there. And in essence, what we have is we've got a Gartley. We should have a Gartley sell pattern now inside the Dow that has set up. I'll go ahead and draw that pattern in here, and it looks just like that. So could the Dow move higher? It could. We don't have any bearish candle here just yet, so it's not necessarily where you've gotten a reversal signal, at least not on the daily chart out here. So I don't recommend rushing in and selling this market here. But we do know where the bears are hanging out. We know where resistance is. We know when the market finally got hold of Ben Bernanke's comments out there, what happened last time. And could that be a repeat pattern out here? Well, I will tell you that going up on light volume shouldn't give the bullish case a whole lot of comfort out here. You would have liked to have seen conviction on the way up, at least somewhere along the line, some type of conviction. Hasn't been there. If we go take a look at the Dow Diamonds out here, let's go see what their chart pattern is, what kind of volume has been behind its move out here. If we take a look at the Dow Diamonds, the B point of an A to B equals CD, that was July 1st. That was at 150.50, 4.8 million shares, and that was crossed with 5.5. So that one, at least, I take that back inside the Dow. At least it did cross the B point with volume. Of course, as it's coming into the downdraft area with 9 million shares, this thing here has not. So in essence, what we would have here would be I wouldn't call this really a Tiger Gartley, because it did cross that B point, the July 1st area, with some volume out here. Inside the diamonds, the 153.58 would be the completion of your 1-to-1 A to B equals CD. But what we really have out here is, because we use these numbers really as guidelines, what we've got the next Gartley sell pattern, the next 0.786 Gartley sell pattern. All that we're waiting for today is a reversal sign. In the case of the diamonds, that becomes pretty easy because of yesterday's high wave type candle out there, very small bodied candle. Close below 152.71 would actually be your reversal signal out here inside the Dow Diamonds. Right now trading out at 152.64. Let's go take a look at the IWM. We must take a look at the IWM. We've got to see these markets here move in unison. In the case of the IWM, yesterday closing above the May 22nd high, that number was 100.38. We're not going to see, it's not likely, we're going to see the Russell 2000 move higher and the rest of the markets move lower out here. So key today to put all things together, you need to see the IWM close back below 100.38. Then what we'd have is a false break topside. Of course, yesterday, the volume on the IWM was 36 million shares, getting above the swing point from May 22nd that had 68 million shares. I don't think so. 877-927-6648. We'll be right back, folks.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow off 11 points right now. S&P down about 2. The Russell 2000 totally flat. Composite up 3 points. So it looks like we're going to have a little flat trading session up until about the 2 o'clock, 2:15 time frame out here. Now we're back to the IWM here real quickly. If, in fact, the IWM does not get back inside the May 22nd high, the pattern that it's trying to complete out here would take you into the 104.50 to 105.10-ish type range out there, and that would be your 1.618 butterfly sell pattern. The reason why I say a 1 point, and if we take a look at a couple different A to B equals CD moves out here, if we take a look at the one coming off April 18th low, that's the larger one, so that's the predominant one. That's coming out at 89.13, the high May 22nd, obviously, out at 100.38, and then that retracement into that May 3rd gap out here, which was done on June 24th. That was 58 million shares going against 52 million shares out there. That would be your C point, and 1-to-1 A to B equals CD would take you up to 105.10. If we take a look at the smaller A to B equals CD, that would be coming off that June 24th area. Now, this is not a confirmed A to B equals CD, nor is the larger one that we just took a look at out there. 1 to 1.272 would get you in at that 104.12 mark. So you've got a 1-to-1 would get you in at 102.70. So your real range is going to be 102.70 to about 105-ish, somewhere right around there. But it looks like more like it would be the 104 range inside the Russell 2000, inside the small caps out there. However, a break back below May 22nd, and it was nothing more than just simply a little false break topside. And what does that set up? That sets up a move all the way back down to that June 24th area. And I suspect that is a minimum where the markets actually want to head to. So maybe it's going to be after Uncle Ben's remarks tonight. Maybe it's going to be after the minutes are released. But we've got high volume bars down there that at least want to be tested. And that's where the market's at. Now, it breaks those areas out, and that sets up the larger A to B equals CD down that's in the marketplace. And that'll be a little bit of pain for folks that do not have stops in place if you are bullish. If we go take a look at the Qs out here, as we take a look at the Qs right now, they're trading out at 73.23. The Qs yesterday getting inside the gap, meaning they closed inside the, not inside the gap, above the gap. They closed inside the June 19th bar. That top has not been tested. Of course, you got 43 million shares to the downside. Yesterday, getting in there with 26 million shares. So far today in the first hour of trading, 4.7 million shares. So pretty light volume. A session that we have going on, knowing that so far all the volume here in the last few trading days has really been front-loaded, meaning during that first hour of trading out there. If we take a look at the B point here inside the Qs, July 1st swing point, 72.30 is the number, 25 million shares. As price got above it, it did with 28 million shares. So that would say, okay, this can get up into that 74.51 if, in fact, it can clear the downdraft from June 19th with 43 million shares. But it's really going to be, that would be its struggle, is getting above 73.68. There's 43 million shares. You are in there on light volume. If we take a look at any patterns that have completed out here, really none, not like the Gartley sell patterns that we took a look at on the diamonds or the SPY, I believe, out there. If we take a look at this one right here coming off of May 22nd, we just don't have a completed A to B equals CD pattern in order to be able to give you a completed pattern in the marketplace inside the Qs. The other key today is going to be going back and actually taking a look at the New York Stock Exchange. Right now, you know, and to me, that's really the whole key to the market. Now, right now, you got the NYSE down 11 points. Let's go over and take a look at the New York Stock Exchange chart out here. And so on the bullish case, what we've got is we've got the oscillator is above zero, and the summation index is pointed up. So that is a trend out there. And as long as you've got the oscillator above zero, bullish-wise, you're in good shape. What's it going to take to get the oscillator below zero today? It's going to take net declining. It's going to take a big day of net declining issues, minus 22.17. But, folks, if you get minus 22.17 today, the market will jump out of the building. It'll jump out of the building. You'll see a huge move. You will see the bears officially take back control of the marketplace, and you will see a rush down to the June 24th area because this market has gone up on light volume. And when it goes up on light volume, it means that when a market then turns, it doesn't have any support underneath it. The only support underneath it is going to be back at that June 24th level, and so it'll get down there fast. If we had some higher volume days on the way up here, that would be a different story. But when you move up on light volume, it means you will jump fast to the downside. It'll be very fast, quick market to the downside. And if you see today a close on the New York Stock Exchange, I can't give you the price here. I don't really need to give you the price. Just pay attention to the net declining or net advancing issues. If it's net advancing, still bullish. Net declining issues of minus 22.18. I can't remember if it's 17 or 18. If it's anywhere near there, folks, not near there, if it's more than 22.17, the bears will officially have taken back control of the marketplace. But right now, it's the bulls in control. 877-927-6648.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow off 25 points right now. S&P down 3. And, folks, if you haven't had a chance to test drive the Tiger's Den, do yourself a favor. Great group of folks in there. Nothing like, one of the keys to being able to take your trading from wherever it is you are now to a higher level. It's always, and anything in life works this way, whether it's trading or anything else. It's always about being able to surround yourself with a peer group. And there's a great peer group inside the Tiger's Den. So if you haven't had a chance to test drive that, go to the homepage at TFNN.com. All the details there. You absolutely want to do it. Now, and what's great is during the show, every now and then I've got several screens going so I can take a look and see the chatter that's going on in there. And I was talking about fast-moving markets, and one of the Tigers goes by the call symbol of Saratoga Bob. Now, what I love about that is that I don't know if he gave himself the nickname or if it was our man Z in the Den that gave him the nickname of Toga. And I was just remembering, he was talking about the Fast and Furious movies. I happen to mention Fast and Furious markets out here. But I love the nickname Toga, mostly because it reminds me, have you ever been to a toga party? When I was a young kid, I used to go whitewater rafting in West Virginia, right around Beckley, West Virginia, a river called the New River and the Gauley River. If you like whitewater rafting and you're in the Northeast, it is a great two great rivers to actually raft. Now you want to do the Gauley River after right around the this time frame. Well, really right around May, June timeframe when they actually open up the dam, and that's got a lot of Class 6 rapids on that. So you want to make sure you're an experienced rafter. if you are doing that. But as a kid, we used to drive to Beckley. Actually, I grew up in Detroit, so we used to actually first go over to Windsor, pick up our beer there because they had higher content, better beer in Windsor. We'd take our beer, we would drive it down to this campgrounds in just outside of Beckley, West Virginia, out there. And I remember myself and my best friend at the time. I remember being around the campsite, falling asleep, and there were a whole bunch of other folks out there, and they were having a toga party. So that's why the name toga just kind of really takes me back to a great memory out there, because I remember opening my eyes. Maybe it had a few too many of those Canadian beers out there. Actually, we used to exchange the Canadian beers for Schenling's Little Kings out there sometimes. I think that the guys who brought the Schenlings got the better part of the deal out there. But I may have, had to. I just remember waking up kind of stunned and seeing all these people around in having a toga party. But in any event, hey, and as I say, Fast and Furious markets. Well, there's another Fast and Furious market that we are going to see explode here at some point in time. And I believe it's going to be the gold marketplace. We're going to see gold. Right now, it's trading out at $12.55, so not a big deal out here. But it's just a little bit of a slow rise, and it's going to start putting some real pain into the non-reportable group of folks that are shorting this market out here. I can tell you that the big money, the smart money, right now, believe it or not, it's on the long side of gold out here. And as gold starts to inch higher, I would say as soon as it clears the bar of June 26, 1277.50 out there, you're 1256. You're going to see a huge, at least at a minimum, a huge short covering rally. And that's at least going to take gold up into that swing point low from April 16th, 1321. And then once it gets up there, because the non-reportable group of traders has never been this net short, ever. And so that will start to put a sting on it, and you're going to see another Fast and Furious market to the upside. I think it's going to come from the metals market. It's the same thing on silver, but gold is the one that will really get their whistle going out there. So to the downside, I think we've got a Fast and Furious market whenever it does crack. To the downside out there, because the volume on the way up has been just simply non-existent. And, you can take a look at any stock chart. In fact, we're going to go take a look at some stock charts. And we can see when markets fall, where they always fall back to is volume. So if we go take a look at the ETF structure here, let's go take a look at the SPYs right now. Got the Qs up here. But if you can take a look at the Qs as an example, you got this volume bar down here from June 20th that had 60 million shares. Heck, at June 24th, you had 41 million shares. You haven't even been close to that on the way up. Not even close to 41 million shares on the way up. The highest volume so far was a couple trading sessions ago, 28 million shares out there. If we take a look at the SPYs, and we take a look at the SPY, the volume bar down here on June the 24th, that's got 222 million shares. Nowhere near that kind of volume on the way up. Not even close. And so you're going to see when the market does crack, it's going to get down and test that June 24th area. Now, you get back and you test June 24th. If you test the low, 155.73, on less than 222 million shares, and you hold that area, you get a bullish candle. What it's setting up is, quite frankly, a nice little trading range from 155.70 to about the 166 type area out here. But it will be a fast move to the downside because there is no volume to stop that move. If you clear that, in the case of the SPY, as an example, you clear the low of 155.73, all that it's done is set up the large A to B equals CD down. Right now, if the advance in price is where we're at here right now, that sets up the 1-to-1 move down to 151.98, and the real move is going to be right down to about the 148 level. 147.17 is still my call inside the moved in the SPYs during this 6-month unfavorable seasonal cycle that we are still in here. So that is, now let's go take a look at some stock charts out here. Let's go take a look at some things here that are popping and dropping. Let's take a look here at, let me see what I can find here, percentage-wise. That might be down. Rackspace. Well, let's go take a look at Rackspace. RAX is the ticker symbol. They're off 7% this morning. Let's go see what Rax is doing. There we go. So Rackspace here, and not anything huge. Rackspace here has had several big downdrafts, but let's pull this back further. If we take a look at Rackspace, so let's do this out here, just so we can take a look at this equity. If you take a look, if you're watching this on Tiger TV, what I've got here is a big volume bar on Rackspace that sticks out. Is right here on September 29th, 2010. Now, the level there is $26. And Rackspace went ahead and moved all the way up to $81. Moves up to $81. Again, that high volume bar right around the $26 area. When that thing cracked, and the first time that it cracked was right here with volume off the top on February 13th, and he had 15 million shares to the downside. That automatically set up the eventual target being down here on this high volume bar, because there was no, it's now on the way up, it stopped at certain volume bars. The first target here was this volume bar here from February 15, 2012, and that had volume of 4.2 million shares. You can see as price moved down, it moved down right into that area. That was the first place of support for this equity to fall, and that's just simply how it always works. So it's important to understand where the volume is. That's where utilizing Tom's price and volume out there is just simply so key to understanding markets and understanding where it is that something can fall out of bed. You can take any stock, and when it does fall, let's go take a look at Green Mountain Coffee Roasters. It's down 4% here this morning. I bet if we go pull up that stock chart, this thing has fallen out of bed several times out here. It just doesn't want to give up. GMCR is the ticker symbol. So let's go ahead and we'll pull this thing back. And this thing had a meteoric rise out here. Let's see here. It got all the way up to the high here of September 19th. Maybe it wasn't the 19th. Maybe it was the 20th. Gets up to 115.98. It's trading at $69 here right now. And if we take a look at volume bars, okay, in this case here, if you take a look at the move from its breakout of March 11th, which had 10 million shares to the upside, it never had any significant volume as it made that high. And when it fell out of bed, if you take a look at that volume bar, which is here on March the 9th, 4.9 million shares, when this thing finally made its way down, it found some decent support as it finally got all the way back down there. So that is from $110 or so all the way down into the $60 range. That is one heck of a huge move. It's why you need to understand where is the volume bar on the downside. So you may say, hey, June 24th, that's not a big deal. You can go ahead and take that heat. It's just that if it breaks out the low of June 24th where you're like, I don't want to be inside that kitchen. So that's why paying attention to those volume bars is key. If we take a look at Green Mountain Coffee Roasters, the next time that this falls out of bed, I can't guarantee you that it does, but the next time that this falls out of bed, and right now it's trading at $69, it's going to make its way down to $24.99 to $27.99, somewhere around there. That's that high volume downdraft bar from May 4th out there. So the next time this thing falls out of bed, that's what you are looking for. It had a nice little sign of strength out here, which is really what it's testing right now. That little sign of strength was on May 10th out there with 9 million shares. Today, the low of that, by the way, is 73.55. Has not hit that yet. You've gotten down, or it's gotten down. Oh, I take that back. It has, let me just put a line across the chart here. So it is testing no, it's not. Okay. I think I just wrote down the wrong number. The number here, the low is $67 even, Steven. That is on the May 9th move up with 26 million shares. So it's going to get back and test $67. Right now, it's got 3.8 million shares in a little bit over an hour of trading. So it seems like volume-wise, it should be able to hold that level. It doesn't seem like it's going to have 26 million shares, but maybe there's a little bit of a buy here if you're trading this as it comes down and either test that low $67 more than 3 times would be good, or all the way back to this breakout level of May 8th, which is right around the 59.48 area on less than 8.9 million shares. That would be nice out there. But the damage, the problem that you have here is that high volume bar. If this thing falls out of bed, your risk needs to be a move all the way back down to the $27 to $25 area. Let's go to Lou in Nashua, New Hampshire. Lou, thanks for calling. Thanks for holding. How are you doing this morning?
All right. How are you, Steve?
Excellent. Thank you for asking.
Is the shot in the euro all over?
Let's take a look at the euro. I don't think that it is all over. I think that what the euro is doing right now, it has made its 100% move of mover very, very close. And the swing point that we're looking at, Lou, is May 4th. And that low, 1.2743. It's gotten down close to that area. It hasn't actually tagged it. And if you're looking for a short, what you'd like to see is some kind of a bounce here in the euro. I don't know if you're going to get it right now. There would be an indication that you could get that bounce if it were to close above 1.2897. If it closes above that, that's going to set up some kind of a bounce. What would that bounce be? I'd take a look at your dead cat bounce area first, which would be right around 1.3012, and that's where you would take a look at coming in on the short. But right now, if I go take a look at a shorter-term chart out here, let's see if there's any patterns on the 30-minute chart here for the euro and see what it is doing out here. Looks like it missed a 3 drive to a bottom pattern out here. Let's see here. Let me just want to see. So it was a little bit short of forming a butterfly. So it's got a little bit of a butterfly pattern on the 30-minute chart at about the 126.79 level. So that would require another move to the downside. But I do not believe, taking a look at that daily chart, the answer to your question, are you in a short position or are you looking to get in a short position?
No, I was looking to get in.
Yeah. What's interesting here on the 30-minute chart, what I've got up on the screen, I've got the 4 exponential moving averages. The one that you want to pay close attention to may be the 200 period exponential moving average. That's the green line going across my screen here. And what I've noticed here, now that I've got this on the screen, is ever since the downdraft that took place back in June 19th, so we're going back, almost, 20-some-odd trading sessions, 25 trading sessions or so out here, it has not been able to really break above that area. So if you're looking for a short-term short on it, you might want to consider doing that, because I can see it's also on the 30-minute chart into the extreme overbought territory. So if this thing could get up to about 1.2857 or so, that might be an area for you to take a look at a short-term trade. If you see this get above that 200 period, come back and test it and stay above it, then we're going to see that little larger bounce that we were taking a look at on the daily chart. But I do believe that this has lower to go over time. It's just a question of trying to find a place to get in.
That's true. That's true. Okay,
Alrighty.
we'll keep an eye out. Thanks, Steve.
Oh, you bet. You bet. Have a great day.
Yeah.
Let's take a look at a couple of things here that are moving to the upside in the market. Actually, we haven't done this. We're in the currency market, so let's go back. We took a look at the euro briefly. Let's go take a look at the pound and see what it is doing out here. The Great British Pound right now trading out at 1.491 out here, and that too, all that it has done is it's traded right into support, which has held, which is the low of the hammer from March 12th out there, 1.483. So that level has held. Today could be a bullish sign, a bullish sign from a bounce standpoint, if in fact the Great British Pound were to close above 1.494. If it doesn't close above that, all you've got is a little bit of a piercing candle out here. But once it did close above that on a bullish engulfing, then that sets up a little bit of a bounce, and it also tells you that you've got strong support at that hammer back on March the 12th. Where could this actually bounce to look at getting in on the next short? Well, the dead cat area, 0.382, 151.7, that would be a spot. A normal bounce is 153.9 inside the pound. So if you're short the pound, know that you are up against an area of pretty significant support, and you're watching to see how yesterday's bar is dealt with. 877-927-6648. We got the Dow trading down 20 points right now. S&P off 2. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there. Whether it be our health, career, or our finances, some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Big mover today is light sweet crude up 2% here, up $2.16, trading out at 105.69 as we speak. Now, 105.98, which it has hit, it got up to 105.99. That was your completion of your 1 to 1.272 A to B equals C, the up pattern. You know, it had completed the 1-to-1. We never saw any bears show up into the marketplace. We saw a red candle, but that candle on July 8th, that was not a bearish candle at all. It wasn't a reversal signal. It was nothing more than just hitting the pause button on your DVD player, your pause button on your, in your market inside light sweet crude. What we do know about light sweet crude, it's headed to 114. Or so. How do we know that? Well, it has broken a consolidation pattern, a one-year consolidation pattern going back to July of 2012. It broke that. And it's not going to come back there and test that. Too bad. It may test it once it gets back to the 114 level, but that is a 14-point trading range out here, and so it's on its way up to the 114 level. Now, it is in the process here of making a 100% move of a move where it fell off of a cliff here back in May 1st, when it was up at the 106.43. We'll see if this area here holds as resistance. It's never been tested out there. Next swing point of any significance really at the 1010 level. But if we switch over into the weekly chart here, the weekly chart, what this also shows, so not only did we have a consolidation for the last year that it broke through, and that means it's moved to the upside is bullish, 14 points. What we also did, or what it did, was it broke a long-term descending trend line. It broke a long-term descending price channel out there. And that does not spell good things for the price that we're going to be paying at the pumps here coming late this summer, early this fall out here, as light sweet crude moves its way all the way back up to the swing point here, which is where I suspect that it's going. That's the swing point high from the week of May 6th of 2011. That price is 114.83, so that is really fits within the target range, and we got to hope and pray that that is really where light sweet crude stops. Why? Because the next swing point above 114, folks, this is a weekly chart that we're looking at, is all the way back out to $147 out there. I'm not saying that's what's going to happen, but if you do take a look at this stock chart, we can take a look and also suggest that this has been consolidating on a weekly basis going all the way back into October 10th of 2010 out there, in between the lows of about $82 all the way up to that 114-ish range out there. So looks like 114, that is the number where light sweet crude is headed to. If we take a peek here at bonds, let's go see what bonds are doing this morning. Well, here's the 10-year Treasury yield. That is on the rise for sure. Let's go see what bonds are doing here this morning. Bonds not doing much. Still trading inside this wide-ranging bar on July 5th. That is always dangerous. The top of that bar, or at least the open of that bar, 135.15. Until that bar gets cleared, all that this is doing is just simply probably working off an oversold condition that it's in. Yeah, that's really all that it's doing right now, just working on oversold condition. And this bar here is really crucial, July the 5th. It needs to clear that in order for any significant bounce to really form out there. Otherwise, you have more of a potential continuation move to the downside. That's on the 30-year Treasury. Natural gas out here. Nat gas continuing to try to get inside that rising price channel, but really, really struggling. Now, it is making higher lows out here and higher highs, but it still is struggling to get back inside the rising price channel. And that is really about it for the show. So, folks, pretty flat session out here. I expect we'll see that till about 2 o'clock. Remember, when the market does crack, if it does crack, it'll get to June 24th before you can say Basil Chapman, and he's up next. Stay tuned. Basil Chapman up next. Following that, we got Larry Pesavento. After that, Daryl Martin, David White, and then the Tom O'Brien Show from 4 to 6. Have a fantastic, wonderful Wednesday, folks. I look forward to seeing you in the morning. Take care.